The president denied that his tariffs had anything to do with the contraction, blaming the Biden overhang. President Donald Trump promised that his second term would mark the beginning of a new golden age. The early economic returns look more like pewter. The Commerce Department on Wednesday estimated that the U.S. economy shrank during the first 3 months of 2025, its worst performance in 3 years. The 0.3% contraction is a sharp decline from the 2.4% expansion that was notched in the final full quarter of President Joe Biden's presidency, and it's a far cry from the boom times Trump allies and top CEOs had anticipated after the president was re-elected. What's more, the pro-growth elements of his agenda, such as the extension of the 2017 tax cuts, haven't materialized, providing little cover for the negative effects of the president's trade war. We came into this year with the idea that your tax policy was going to be enough of a tailwind to overcome the negatives from trade, said Brett Ryan, a senior U.S. economist at Deutsche Bank Securities. That script has been flipped. Commerce's initial estimate is a rough start for a president who was elected on the promise of unleashing private investment and boosting the spending power of American consumers. Recession fears have climbed in the weeks since Trump began rolling out a series of massive tariffs, followed by quick reversals, that economists and Wall Street CEOs say will drive up costs and weaken investment. The first quarter contraction may soon force Trump and his advisors to reckon with the political consequences of an electorate that is quickly souring on major elements of his economic agenda. And it threatens to cut into his political capital at a time when he needs it the most, as he asks the American people to trust him on his aggressive tariff policies. There is no good news on the economic front. And since he was elected with that as a primary mandate, they have a problem, said Douglas Holtz-Eakin, the president of American Action Forum, who was a top economic advisor to Sen. John McCain, Arizona. During the 2008 presidential campaign, less than an hour after the report was released, Trump defiantly posted on Truth Social that he didn't take over until January 20, and suggested that it may take time for his agenda to generate economic returns. Tariffs will soon start kicking in, and companies are starting to move into the USA in record numbers, he wrote. Our country will boom, but we have to get rid of the Biden overhang. This will take a while, has nothing to do with tariffs, only that he left us with bad numbers, but when the boom begins, it will be like no other. Be patient. Yet Trump's tariff policy was among the biggest factors working against the economy's growth. Demand for foreign goods surged during the first 3 months of the year as businesses scrambled to get ahead of his new trade barriers. The Census Bureau reported that the trade deficit for goods hit a record high in March, which negatively affected commerce's estimate since it subtracts from GDP. The concerning economic numbers have done little to shake the conviction of the White House, where aides seized on underlying figures that they contended show the economy's fundamentals remain stable. The economic contraction was partially offset by stronger than expected consumer spending and private investment during the quarter, which muted fears that a recession could be imminent. Peter Navarro, one of Trump's top trade advisors, told reporters that this was the best negative print, as they say in the trade, for GDP I have ever seen in my life. With no expectation that Trump will back off his trade war, officials have cast the anxiety in the markets as a necessary short-term disruption on the path to economic relief that they hope will arrive in the form of a raft of preliminary trade deals and, eventually, a sweeping tax cut package. One advisor to the White House cautioned that Trump could still face growing political damage over his tariff policies, given how visible the price and availability of goods are to the public. Those are the things that will cause a potential reaction, the advisor said. But Trump is so invested in the tariffs now that it's too late to back off. He's pot committed, as they say. Sen. Tom Tillis, RNC, whose seat is a top target for Democrats in 2026, cautioned that hanging disappointing economic data on Biden may have a short shelf life. That will work now. It won't work 6 months from now, he said. There is some argument to say that some of this is allowed from the prior administration, but once you get elected, you own the account. While the stock market has climbed on recent statements suggesting the administration has made meaningful progress on trade agreements, there is still tremendous uncertainty on how higher trade barriers could ultimately affect growth and prices in the coming months. Tariffs cause hell with the economy, said economist Arthur Laffer, a Trump supporter who advised the president on tax policy during the president's first term. I don't know exactly where President Trump thinks things should go. I don't know where he's going. I'm very hopeful that he's going to get tariffs down substantially, he said. When he's in the midst of negotiations, he scares the hell out of me like he scares the hell out of everyone else. Consumers have grown increasingly pessimistic. The Conference Board's monthly survey reported that expectations for the future are now at their lowest level since 2011. The view from the C-suite is equally dreary. Companies like Delta Airlines, GM and UPS have scrapped financial guidance in light of tariff-related uncertainty, and Republican titans on Wall Street like Citadel's Ken Griffin and Elliott Investment Management's Paul Singer have warned that Trump's policies could undermine the foundations of U.S. markets. With each passing day that we get away from the implementation, from Liberation Day, it gets harder to fully restore sentiment, said Tim Quinlan, a managing director and senior economist at Wells Fargo. It's kind of like trust. It takes a lifetime to build and only a moment to destroy. Until now, dour forecasts about the future hadn't translated into any material weaknesses to the economy. Treasury Secretary Scott Bessent said this week that he doesn't pay attention to the surveys and that the actual data on the economy is actually quite good. Unemployment remains near historic lows and Americans spent freely in March. Larry Kudlow, the Fox Business host who led Trump's National Economic Council during his first administration, dismissed recent polls giving the president dismal marks as skewed. But the weak GDP report suggests that bad vibes are starting to negatively affect real economic output. Some leading economists, including those at BNP Paribas, Deutsche Bank and Wells Fargo, had expected the GDP report to show the economy shrank during the first quarter. Still, real final sales to private domestic purchases, which reflects consumer spending and private investment, climbed by a healthy 3% during the first quarter, which is a sign that demand remains strong. The Personal Consumption Expenditures report released Wednesday morning indicated that consumer spending and income levels jumped in March. Excluding volatile food and energy prices, inflation climbed at an annual rate of 2.6% last month. There are concerns, however, that could fade in the coming months if surging import costs cause prices to spike, or if companies begin laying off workers. The Conference Board's survey found that consumers are pulling back plans to make major purchases or take vacations, and expectations for job availability have softened as the number of available positions declines. Trump's commitment to imposing record-breaking tariffs, coupled with the uncertainty created by frequent escalations and reversals in the ongoing trade war, has hammered the ability of U.S. companies to plan for future hiring. The Business Roundtable's quarterly survey of top CEOs reported a sharp decline in the number of businesses that are likely to expand their workforces in the next 6 months. The Labor Department earlier in the week reported that job openings fell by 288,000 to just under 7.2 million in March, the lowest reported tally since late 2020. What we found in the past is that trade uncertainty has a depressing effect on firms' spending on capex and on hiring, Deutsche Bank Securities' Ryan said. A slowdown in hiring means less income growth.